Inflation figures and market realities. That's what is important to us this morning, especially in the light of the Yuletide and purchasing power. So we'll start off with a discussion on these latest figures from the National Bureau of Statistics, which shows that Nigeria's annual inflation rate has dropped for the seventh straight month to 15.4% in November, as against 15.99% reported in the previous month. As you've seen in the welcoming slide, Professor Ken Ife is one of our two discussants this morning. He's a macroeconomic policy analyst. Thanks for joining us today.
Thank you for having me. Good morning, Nigeria.
First of all, is it any comfort to you that inflation figures have dropped for 7 straight consecutive months?
Well, I think it is. I think it is. But there are two sides to every story. The one side is that the inflation looks at a yearly outcome and a monthly outcome. So when you look at it year on year, which is what is really reported, you will see a gradual drop. But when you look at month to month, you still see a rising figure.
Now I'm confused.
Yes. Yeah. Well, this is why I'm here. You see, if you look at that's what normally, even GDP, they usually focus on year to year. And if you look at what happened last year, that is significantly different. How it's driven down the price. You will see that there was COVID, so that's no problem. It's brought the economy to a halt. But at the same time, there were significant price rises in prices. And the one that was of most interest is what happened to food, because of food scarcity as well as rises in the price of food. So that particular one, the driver for the current drop we are seeing is actually the food sub-basket index. All over the last 3 years, the distance, there are 5 inflation indices that are playing here. You have the composite price index, which is the headline inflation. That is for all the inflation indices, averaged out, weighted out, is CPI. Now you have the second one, which is core inflation. The core inflation is all indices minus food sub-basket index. Then you come to food sub-basket index. That's the biggest one that drives because it's compounded by insecurity and even the reality that we can't produce enough. Okay. Then so that food sub-basket index has 2 sub-components: imported food, processed food, and then also farm produce. Farm produce is the most volatile. Volatility, going up and down. But then the driver of inflation is the food that is the actual processed food. Because there are still sub-components of that: imported processed food and locally manufactured processed food. Both of them are subject to 2 types of inflation. The inflation in the country, in the rises of infrastructure costs. Then the other one is foreign exchange that you are using to import, and then you have the knock-on effect of that. Straight pass through to the consumers. Then the 4th and 5th are the urban inflation sub-index and rural inflation sub-index. Now what happens is that there's a rise in price across all indices, without a doubt. But they vary in intensity. Generally, but they vary in intensity. So the fact that it is positive means that there is still rise in inflation. But the level of rise in each of these sub-indices is different. When you see urban sub-index going higher than the average, which is the headline inflation. For example, headline inflation is 15.4, but the urban is 15.92, which means that it is higher. What it tells you is that the theater of inflation, that is where is it really happening, is in the urban areas.
But it's no less cheering in the rural areas as well.
No, the rural is 14.89. The rural tends to always be below the aggregate.
But what's interesting in this analysis is that it also rose.
No, I'm coming to that. All of them rose, except the food sub-basket. So that's where I'm going to unpack. So the urban, there are all other things that happen in the urban. All the imported stuff, they are more intense in the urban. Transportation costs of food from rural to urban, then the infrastructure costs in the urban, or electricity, all of that. So you can see all the things that are contributing to making it the theater of price rise in that inflation. Then, why are we having the food basket forcing the price, the composite down, while all other indices are heading up? That's a very important question. So let's take it a bit further. If you look at the food sub basket index, there are two components of it: the farm produce, which is the most volatile, and then the processed food. And that same processed food is part of the core inflation. So it's a common denominator between the two. So if the collective food sub basket index is heading down, which is the case now, and then suddenly you also saw the core going up, it means that the processed food is the fundamental driver. And then when you now have to examine the two sub-index of processed food, which is imported processed food, and then imported processed food and domestic processed food, you know that the domestic economy is under pressure because the price of petrol is going up, prices of power is going up, so you should expect that transportation cost of that is going up. So input cost is trending up. And then don't forget that 80% of our domestic manufacturing capacity depends on imported raw materials and spare parts. So that is influencing it. And then suddenly, the other one that you go and buy dollar in black market and import, the price will also go up. Okay. So that is what tries to explain those. But generally, why you are actually having a general drop is because if you look at the distance between food sub basket index and the headline, it's always been, over the last 3 years, always been about 4-5%. Then if you compare it to core, it's always been around 8 to 10%. But now it's narrowed down to just under 2%.
Ultimately.
So which means it's that huge driver is coming down. And it's so because last year you had, in addition, flood affected food supply. This year we are lucky. Flood didn't affect.
My apologies, Prof. Some of these things are not unknown. One of the questions that usually comes to my own mind is, look, we know that some of these things are going to happen. What are we doing to get ahead of it? But we have someone else joining us, Dr. Bongo Adi is an economist as well. He is with the Lagos Business School. Thanks for joining us this morning, Doc. First of all, let me ask you the same question I asked Prof here. Is it any comfort to you that the inflation figures have reduced in 7 straight months?
Well, yes, definitely. Even though it doesn't seem to be, the feeling or the experience on the street. I heard, I think, Prof speaking about it. He's managed to decompose it and then show where the drop is coming from, and I think I quite agree with him. But unfortunately, it is not the same experience that people, generally are having. For obvious reasons. So we've seen what has happened to the exchange rate in recent times. Okay, so that has actually culminated to people having this experience of increased price in the cost of living. Of course, cost of living, when we talk about cost of living, it's about inflation, because inflation comes from measuring the basket, So Prof has decomposed that, the headline, the core, and the food inflation. Yes, food inflation is highly volatile. And then from all indications, it seems to be the case that last year there was higher volatility than we currently have witnessed, given the flooding. And of course, let us not forget that we're looking at year-on-year changes. Last year, that's 2022. That was a year, very difficult year for our country and for every country in the world because of the COVID-19 pandemic and the lockdown. Okay, so when we look at that, definitely, even the constraints in supply, in logistics that was experienced, not just locally, but internationally last year. So there is every indication that, yes, what is being reported is what it is. But of course, the feelings of the man on the street is quite different.
Well, Doc, please humor me with this question, because Prof also spoke to the fact, and maybe you may want to expatiate that rural inflation is also said to be on the rise, which takes me to inflation at the states level. But before I ask that question, gentlemen, both of you, please answer to this. But I'll begin with you, Dr. Adi. Is inflation good or bad for Nigeria's economy?
Well, I think that's a very easy question to answer, because if you go back to what we know, from economics, you talk about the 4 or the 5 big macroeconomic, problems or macroeconomic issues. Okay, the first one is economic growth. The second one happens to be inflation. And of course, growth in terms of priority is, has higher priority than inflation. But of course, inflation contributes to that growth. Then we have unemployment. Inflation has something also to do with unemployment. And again, when we talk about business cycle, inflation is also at the core of business cycle. And then you look at exchange rate as well. So when we look at the 5 big problems, growth, unemployment, business cycle, and of course the inflation, so you have inflation at the center of all these things. So is this something that we should be disturbed about? Yes, it is. But we have to look at the other factors that should drive inflation, which is the current trade deficit, and then the borrowing spree that the government seems to be in. So when we look at all of that, we can begin to predict or forecast to a certain extent what will happen to credit in the system given inflation levels. That's interest rates, especially because there's a one-to-one relationship between inflation and normal interest rates. So it is something that we need to worry about if inflation is rising. And that is actually the preoccupation of every central bank in the world. Inflation targeting is a key macroeconomic policy, trying to bring inflation within a band where it doesn't hurt growth. Is something that is of priority to every central bank in the world, and not least ours.
And that is what's of interest to me, Prof, because I understand from research that inflation is not altogether bad. But at what point? So that's why I'm asking that question, whether it is good or not, especially for our own.
It's like pressure. It's like, what do you call it, stress. There's a degree of stress that you need to
so we need a degree of inflation?
No, I'm saying there's a degree of stress that you need. You can't run on zero stress. It doesn't work like that. So in inflation, the inflation comes at the junction between monetary policy and fiscal policy. And then also where you are looking at how do you control money supply in the economy in relation to having growth in your economy, having employment in your economy, and addressing major causes of poverty. So the thing is that which price are you prepared to pay to have the unemployment go from 33% on average, 50% plus for young people, plus additional 20% underemployment, over 70%. You want to live with that? Can you also live with zero growth in the economy? Or do you want to just take in as little as possible of inflation while making sure that you are prioritizing growth, diversification of your economy, employment, and poverty reduction? The choice is clear. So we have had the regimes of, the previous regimes and all of that. I was in the dugout. I was in the trenches fighting the central bank of previous regimes of being obsessed with inflation and sacrificing growth and employment in our economy. But now what we now have is sensitivity towards making sure that we are addressing economic diversification in our economy, strengthening our economy, having more resilience and inclusivity in our economy, employing people more, and at the same time, using that to find the appropriate policy, macro and monetary policy mix that allows us to grow the economy.
Okay.
So that's a fundamentally different approach.
Well, so much.
So is it a price worth paying to some extent? The answer would be yes.
Okay, so it's not altogether bad. When it's too high, that's where the problem is. Okay.
Yeah, that's correct.
Okay. Malpe?
So I'm wondering right now, is it too high? Because we know that oftentimes what the CBN tries to work to is a single-digit inflation. We're not quite there yet. Is it too high from your own assessment?
High, but not too high. I tell you what, I've looked at it when I addressed the bankers, chief of the bankers committee 2 days ago. I showed them the macroeconomic projections on our national development plan. We are looking at about 2024 for the inflation to head down to 9%, back into the single digits. So that's good news, and it's a continuous, continuous slope, cooling off, going down to that. So that's this. But where we are was aggravated by the crisis that we have in the economy, production crisis, supply chain disruptions, name it. Is all, and this pervasive insecurity across the 6 geopolitical zone that has adversely impacted the agroecological footprint. That we have people who can go to farm, and there's who can run the risk. And then we have women who do 80% of our growing our crops, do 80% processing and 80% market, and they can't feel freely doing any of those anymore. So the whole economy was hostage to a pervasive insecurity, and there's an asymmetric insecurity situation that there is very little you could do to rapidly clamp down on it. So we are paying that price. Inflation is high, but you also need to compare us to other climes and see how we rapidly push resources, 2.4 trillion plus 3.5 trillion, all quantitatively responding to COVID last year, and he got us completely out of recession within 1 quarter. Many are still in recession. Many countries are still in the recession. So when you pour that order of money into the economy, and then to bail you out, and then also have so much,
there'll be questions, Sir Prof. There'll be questions as to, because oftentimes when we look at this, we're looking at it on a macro basis. We're looking at it in terms of how the country is seeing it, the bird's eye view. But if we're to drill down, when we look at the fact that unemployment is high, it's still well over 30%, as confirmed even by the Vice President yesterday. The MBS hasn't done, we haven't seen recent unemployment figures released. So what the last figure we have is that it's still over 30%. When you look at the fact at the earning capacity of many Nigerians, we do not know how this is trickling down to, whether a lot of Nigerians are out of recession in their own homes. So there are questions in that regard. How do we begin to see what the true picture is when we drill down to the micro level?
Always a challenge, because this is why you have the major issue facing government about redistribution of wealth in the country. So that's a fundamental issue. How do you sustainably reduce poverty? So there's always that dichotomy of 10% of the people being at the highest echelon, and then you have the base, and you haven't got the middle class in between to balance the growth. So that is a problem, a challenge facing government. But to say that the economy is not moving, I wouldn't agree, because the economy is moving. You have growth, 5%, and then down to 3%. And I hope that by the end of this quarter, we will go above 3, so that we are finishing stronger than anybody's projection of about 3% plus for the whole of this year.
Is that what you're confirming?
No, yeah, that's how I feel, and I'm sure the figures are showing it, because we are going to end up with a reasonable, decent GDP outcome this year, this month, because of all the high spends going on, the season. And also the inflation has come.
So let's come It is true. It is true that I mean, Christmas is here, and you know, there's always talk of a dirty December. We do not know how dirty this December is going to be. But let us look at 2023, because you have said that, beg your pardon, 2022, because you said that your projections is that we should be heading for single-digit inflation in 2024. Now, some people will say it might be very difficult to share your optimism, considering the fact that we're going to be entering a political year. And starting from now, 2021, December, where we should see, as a result of the festivities, some increased spending. But we do not know what will happen in 2022 and the effect of the activities of politicians and what it will have on the economy. What are your projections precisely for 2022?
No, 2022 will actually be better than 2021. I tell you why. Because we are beginning to close some gaps. You've seen the PIA create a major opportunity for us to increase government revenue. And you even had FIRS saying that they're going to get over 10 trillion, which is twice what they're getting. So you've seen a concerted effort by government to raise this misery of 6.7% government revenue to GDP, heading to 15%. I've seen so many Moody's projections, all these Fitch not agreeing, but they're still saying that there will be a rise to about 8.8. So what it is that if you look at all parameters, the debt will increase. I'm not saying that it's not. There's more borrowing because the borrowing plan is for the next 3 years. So there will be more borrowing, but there is a conscious effort to narrow the deficit gap. And I'm not going to say to you that trade balance will improve. It's going to worsen. You've seen it. We have 3 trillion in deficit, in trade deficit. And they are now having traders. They don't want to do any other business. Nobody wants to do any other business to go and buy money in the black market and import from China. That's what they're doing. And that's what is giving them the revenue level that they want to deal with, you know, the inflation and the high cost of borrowing. And then you see the like of China doing 2.44 trillion, and then we have nothing to export. You know, I mean, it's scandal. But the fact of the matter is that on balance, when you look at all aggregates, there is likely to be an improvement in the growth plan. Look at the growth plan. What 350 trillion investment between now and 2025. And then who is doing that? Federal government is doing 30 trillion, state governments and 20 trillion, then 14.7 for the state and local government. And the private sector was embracing, when I gave them the figures 2 days ago, they were embracing, the bankers, they were embracing for how they're going to meet that challenge. So there is a huge plan out there. And then the MPAs, you even had the Senate, you had everybody saying, get everybody into the tax net. That, you know, there's no question about 122 scheduled corporations. They want all corporations to come into the thing and account for what money they're getting and put all their money into this. Because so there is that sense of urgency that they have to do something. And then you also know that the central bank allowed overdraft of over almost 15 trillion ways and means, and they're going to probably move it into a long-term borrowing to reduce the pressure. But these are realities. So, on balance, I would say the probability of us doing better than this year is, I have more trust that we could do better next year than this year.
Well, I don't know if Dr. Adi shares your optimism, and he's free to express that. But I'm wondering how this is going, because if you have listed the challenges right now, which is the fact that productivity is still not where it ought to be, and that we're still largely import dependent. In fact, that's what a lot of businesses are about, and that there are security challenges, which is, you know, affecting supply chains and also preventing 80% of our women farmers from being able to go to the farms. We have to ask whether this headline inflation, which seems to be declining, isn't given a rather warped impression of what is truly happening when you drill down to the bottom layer of the economy. What's your take, Dr. Adi?
Well, as Prof said, inflation is not all the story. Of course, it is central to the story, as I tried to say earlier. It is the center of the 5 big issues that we are talking about here, whether it is growth, unemployment, or inflation itself, the business cycle, the normal ups and downs of the economy or the exchange rate. So inflation has a key role to play. But let's just break it down now. What is the source of the problem? We, just as you rightly pointed out, we have very low output levels. And then our potential GDP, actual GDP, what we're producing, still very much lags behind our potentials. Okay, and whenever you have that kind of situation, it means that whatever capital that you bring in, you go a long way, and then it will give you the impression that you are really growing. Actually, you are growing because the marginal productivity is increasing because you are at a low capital base. So that is what we seem to be experiencing in Nigeria. And of course, when we talk about growth, it means that some firms are also doing well because it is the aggregation of their marginal growth that gives us the GDP growth rate. But that is not a problem. I think our growth is driven mainly by consumption. So if you break out the GDP components, the output components, which is kind of recursive, if I may say that, because it's an identity. So you have output given by consumption, the sum of consumption, inflation, what government is spending, and of course the difference between the export and the import. Now, let's start with that last one, which is the external sector. So the external sector is in deep trouble right now. Prof alluded to the trillions of naira. I don't want to use figures here, so let's keep the tension a little bit low. So Prof alluded to that. We run a very huge trade deficit. I think the largest in recent memory. Okay, so that sector isn't anything to write home about. And then we break it down to the primary income, and the secondary one, the primary income balance and the secondary income balance. Primary income balance, which is the current account, is in deep trouble. And then the secondary income balance, because government is borrowing money, so a lot of money seems to be coming into the country because of that borrowing. That seems to be, giving us some bit of a breathing space. Okay. Wow,
Dr.
but it has a
Dr.
cost.
Adi, please, I'm going to ask you to please hold your thoughts for us, if you can hear me. We will let you finish, and then when we come back from this break, please stay with us. Well, those are the words of the Vice President at the celebration held yesterday for PEBEC at 5. That's a presidential enabling, I'm trying to remember the full name now, but I know it's supposed to enable business and an environmental council. They were 5 yesterday, and he was reeling out some of the progress that they have made so far. But the last words of the Vice President were extremely instructive, that we're still very far from our objectives. We've been speaking to two very gentlemen this morning on the issues at hand, which is the fact that headline inflation seems to be declining, which is supposed to be a good thing. But in the markets, it looks like food inflation is still on the high. Just before we went on break, we're speaking with Dr. Bongo Adi, and he was giving an explanation, something about consumption. You said something about consumption being is going to increase in this season and maybe perhaps for the coming year. Some people will say that there's absolutely no problem with consumption. The question is, what are we consuming? That's the big question. What do you think we should be doing to consume the things that we actually produce so that it spurs growth in other areas?
Well, let me go back to, I'll respond to your question, but let me finish my thoughts, the train of thought I was sharing earlier, which is that we have an increased inflow in the secondary income balance, given the government borrowing. So there seems to be some, headroom there. Then we come down to government spending. Of course, government spending has become the biggest, source of inflow in the domestic economy. With the government taking a whole lot of responsibility with central bank intervention in critical sectors of the economy. So we've seen government spending, ramped up over the past couple of years. Then the third one is consumption. Consumption is so huge. So when we even look at the activity sectors, you will see that the those ones that are kind of directly linked to consumption are the ones that are driving the growth of the GDP. Okay, there is not much investment coming in. Okay, the investment that we have are the ones that are driven largely not by the private sector, by government. We've seen all the figures. The latest release from the South African Bank, which shows that Nigeria, which used to be a top destination of foreign investment, has now dropped off the list. So we have other African countries from Rwanda to Kenya and all of them, doing very well. Nigeria is, I think, number 14 on that list, not on the top 10 list again. So how much can you do? What can you do in terms of creating jobs when, energizing or catalyzing the real sector when the private sector, when private investment is not the key driver of that investment? There's a limit to what we can do. Now, to your question, on what we need to do to drive, maybe domestic consumption. I think the question should rather be, what are we producing? We produce all the things that we should consume or the things that are necessary for our consumption. The answer, of course, clearly no. The output level is low because we have a production problem. This economy is not producing that. We hinted at the potential GDP, which is the gap between the actual and the potential GDP is so huge. Okay, so given this, gap, a lot needs to be done, and because of our low output level, our revenue is also extremely low. I often hear, answering to some journalists, as like yesterday when they interviewed the finance minister, or when the finance minister spoke, she was saying that we are still within the allowable, range in terms of our borrowing. But of course, this has been discussed ad nauseum, that it's not about debt to GDP. It is rather a better statistic would be debt to revenue, which everybody knows is in a very bad shape. And then what is contributing to that? We have so many constraints in our economy. We have so many inhibitors to output, ramping. There are so many of all those things. So I think those are the things that need to be addressed. Now, I agree with Prof. Government is doing the best it can, putting money into the system, but we also need to be concerned about the fungibility of government, investment, which is what is the ability, at what rate those government spending translates to real output at the end of the day. We know that has been traditionally, historically, very low. Okay, and then we do not also have a transparent accounting system that allows, or evaluation system that allows us to know what governments, do a rational contrast between, or comparison between what government has spent and what the spending has eventually achieved. So without having that, it is not. I think it would be foolhardy to say because government is spending, therefore the economy is going to turn out well. It is not. We have seen a lot of issues coming up with some of the CBN interventions. We've seen that they haven't really translated to the real growth that we are looking at. So what is the case here? Yes, there is this whole strategy, the whole objective to increase investment, both by the federal government, by the state, and by the private sector. But then we need to look at the regulatory system, the economic framework. What support are in place to ensure that we attract or incentivize private sector to play the key role in the economy? So I think those are the things that we need to be looking at. We have a production problem. What do we need to do to enhance our production? I think it's a cross-sectoral thing, multi-sectoral synergy, a lot of things that we need to do. But at the center of it would be, how do we drive private sector investment? How do we attract private sector investment? We don't need to be concerned about what government does or doesn't do when it comes to investment. What should be of interest to Nigerians, I think, is government support, creating the enabling environment. I'm happy that the Vice President speaking to the Presidential Enabling Business Environment Committee or whatever, that council. So I think they still have their work cut out for them. In terms of trying to get the government to do the right things. We have huge constraints when it comes to infrastructure, all right? Nigeria is not the easiest place or the best place to do business in Africa today. And that is the reason why, all the talk about maximizing, optimizing the opportunities in the African continental free trade agreement, it remains like, just, it's just been empty because we do not have concrete things on ground to really tap into that. So again,
but is it getting easier? That's the question, because that's why government has the PEBEC, Presidential Enabling Business Environment Council. Is the business environment, is it being enabled at least incrementally? Are we beginning? Our businesses beginning to report that? That's the question.
I'm a data person, so let the data speak. Right. Currently, we are 14th on the list of investment destinations in Africa. Okay, that tells you all the story. So you don't need me to say nothing about that. So the fact remains that the situation is very bad. Doing business in Nigeria is considered very difficult. Infrastructure still remains a challenge, despite the good intention, despite all the effort of the government. But some people will tell you that for what we have spent in infrastructure over the past, we could get like 3 times more, 4 times more. So it's not even efficient. Okay, so that is the real challenge. The data says it all. Investment is not coming to Nigeria. If you look at capital importation data, it shows you that we're at an all-time low, and everybody knows about that. I don't want to be reading our figures. We know that. If you go to the MBS website, we're going to see all of that. Capital importation currently is at an all-time low. So let the data speak. The data doesn't tell us that the environment is improving.
But what the ease of doing business data is saying is also something that one should consider, isn't it? Well, definitely, the federal government has been making efforts through PEBEC to facilitate, to stimulate the business environment. But then you would know very, very well, both of you actually, but Prof, you would know as well that I don't know what the OPS is saying. The organized private sector is saying about the ease of doing business in terms of levies, in terms of how friendly the policies and execution of some brilliant policies are. As at 2020, we were 131st out of 190 countries in the World Bank ease of doing business.
Well, without a doubt, there had been significant improvement in the ease of doing business. So you have to give it to the vice president and the work that he has done to at least dent that figure. It was a show of shame for many years that we remain at the bottom 4th quartile for years. Disgracefully going even worse. But now we are in a recovery position, but it's not yet Uhuru. I tell you why. There are many areas that are crying for attention. Which, if you look at the tax aspect of it, where he's looking at tax administration, the challenges around tax administration, and the challenges around multiple taxation, and then go and look at Finance Act 2021, see how he's taking it head on. Then you go and look at trade across borders, which are, there are 3 indicators there, the number of procedures, how long these procedures take, and then the cost of it, both on the side of importation and on the side of exportation. Not much has changed in there, but I'll tell you why. How do you explain that to export 100 tons of cocoa from Ghana, the cost to them is $4,000, $7,000. But for Nigeria, for the same 100, you're talking about $35,000. Now, are we competing? That doesn't tell us to be competing. We are not in a competitive position. So why would Ghana be doing so much better in export, in meeting a lot of the infrastructure requirement, quality infrastructure requirement?
Is that the cost of infrastructure?
And the cost is there. Now, let me tell you why it's very important.
I agree with you.
80% of the containers that come into Nigeria go back empty. So what it means is the effect, because backhaul capacity is where you work out the efficiency of transport. It means that you are actually paying nearly double to import because you are sending back container empty. It costs you it should have been $1,500 to bring one container in, $1,500 to send it back. But because you are only getting $500 to send empty container back, then the actual importation will cost you 2,500 to get it in. So the cost is higher.
So that
then
goes 50, back.
Say 80% of the trade itself, overall trade, is coming through the sea. 80% of what is coming through the sea is containerized. And so we have problem. A plane comes in here and goes back empty.
That also speaks to the issue of production that you talked about earlier, Prof.
It's more than production.
Okay.
Because we have two challenges around production. First of all is that we are not comparing like to like. When we tried unpopular things like border closure, the border closure enables us to find the size of the smuggling economy. And we found that the customs could actually earn 5 billion naira every day extra. So we found out the size of the economy. But it didn't deal with the fact that we are a dumping ground for substandard goods injurious to health, that there is undermining of our productive capacity because foreign countries are subsidizing their product to enter into our and decimate our industrial capacity. That's why you're losing 2 million jobs in the textile industry while we are cotton producer and we have the entire value chain represented. And you say we can't compete. And then you have other issues. I tell you, the challenges are enormous. That's why I appreciate what CBN is doing now with 100 for 100 PPPs, now funding with an obligatory limit of 5 billion and then looking to get a new... It's no longer about fighting the political economy in the manufactured sector. No. Because even then, the remaining industries that are surviving, 80% of their capacity depends on imported raw materials. And then, of course, spare parts and raw materials. So we don't have to go and fight the misalignments in that sector, create new stream. So when you now want to encourage new export anchors, new refiner, people who are going to refine our crude or refine our petrochemical or do the solid mineral, get them in, give them 5 billion. In a year, if you fund the 365 businesses, about 1.7 trillion. So let's head on steam in that direction because they're going to be utilizing our local content at least 50%. They're going to be employing at least 80%. So you're creating a new industrial structure rather than go and kill yourself in fighting political economy.
Okay. Well, Dr. Adi, I don't know what role you see for micro, small, and medium businesses in driving down the inflation figures. We're talking about the business environment, enabling business environment that the presidency has been working at for a number of years now. Do you see the climate, the investment, the business climate suitable enough for MSMEs to help drive down the inflation figures?
Well, I think we have to break that down by sector. Which sectors? Yes. So, generally, and based on what we know from other countries, MSMEs are the bedrock, the engine of any economy. So, if we want to increase production, if we want to drive down inflation figures, how do we drive inflation figures down? That's when you increase output. So if the supply increases relative to demand, definitely prices, will begin to notch down. So MSMEs across all the sectors of the economy remain the key, the engine of growth. But currently, what is the experience like? Is the environment supportive enough, for them to flourish, to grow? If you look at the mortality rate of SMEs in Nigeria, recent data, it's been always like that. So in 5 years, any SME is likely to have died, about 95% of them. So how many remain, alive after the first 5 years? Only 5% of them. So out of every 10, so think about what that means. So it's a very serious problem that needs to be addressed. And then how do we go about addressing these things? I don't think it's rocket science, so to speak. It's about government willingness. First, we have to tackle the security challenge. The Prof has alluded to that. Everybody knows about that. So we have to address insecurity. So once that is done, then the next thing, the infrastructure situation. I don't know, we've been saying this ad nauseum, so every Nigerian knows all of this. We can read out the facts. Energy, transportation, these are the critical sectors. Then the logistics, okay? What we are talking about here is our ability to really produce for our domestic consumption. The domestic absorption. let's not worry about the external sector because we are not competitive. And not that I will even begin to support any sort of efforts to get us to start competing with countries like China. It will never happen. If you look at what we call the global value chain, you notice that China and some other countries in Europe, like Germany or Poland, have kind of monopolized the manufacturing space. So everybody, any international multinational that wants to produce, will go for the cheap level, not only the cheap level, but we are talking about skilled level that you have in abundance in China. So they will want to locate there to take advantage of that. And over the years also, these people have perfected driven efficiency in so many production processes. They have achieved a whole lot of innovation, in many areas, in the sense that they now protect and then they have enormous technology, what you call technological capability, the intellectual capital, there, and they're not willing to give that out. It's not very easy for any country to release its trade secret or their intellectual property or the patent. So they protect all these things intensely. So what do we need to do? Now, where do we see some kind of scope to leverage? Where can we drive our growth? We've seen some Nigerian firms, even small firms, doing very well in the ICT sector. Okay, supposing that government begins to create support them massively, right? I know that there is this digital whatever act that is being debated right now, circulated some time ago for people to make their input, which some people found to be highly toxic, if I may say. So those are not the kind of things you need. You need more supporting environment for this fintech ecosystem that seems to be doing very well. And for the other SMEs, how do we improve their capacity to supply, even for the local economy? Mope asked me earlier, what do we need to do to redirect our consumption from foreign or imported products to domestically manufactured products? We need to have the domestic capacity to produce, and then actually produce before people can now begin to consume those. Of course, government needs also some policy, but those policies will have to come. We talk about policy sequencing. Let me take you back to what happened with the vehicle assembly and all of that. Okay. First of all, we needed to, but when that policy came on board, we thought that government would support local capacity, to drive efficiency in vehicle manufacturing and assembly. But after some days, they now lifted the ban on or whatever, everything started coming in. So
it goes back to policy. It all goes back to policy. Okay.
Policy environment. We need to protect that the space that we have, the economy. Protect the local industry. That's what we call. I'm not talking about ISI policies, import substitute industrialization, which may be anti whatever Nigeria has signed with FCTA or whatever. I'm a trade. I believe in liberal market. I believe in open trade, free trade. But at the same time.
Yeah, my apologies. There is always a lot to talk about. It's one of my favorite topics, talking about the economy, because as Prof and you have also said, if it's only when we're able to stimulate production that, from what you economists have told us, that we can actually stimulate sustainable exportation that will raise the value of the naira, dissipate the unemployment figures, and improve the global image of Nigeria's economy. But I guess we have started the conversation, or rather maybe continued the conversation in the light of inflation figures and market realities. For now, we have to thank you both gentlemen for being a part of our conversation this morning. Professor Ken Ife is a macroeconomic policy analyst. Thank you so much for your time, as well as Dr. Bongo Adi, an economist with the Lagos Business School. Gentlemen, thank you so much for your time and thoughts this morning.
Thank you.